the markets nearby the support level. Yesterday was a roller coaster rally for the Nifty because we have seen a gap down opening and then we have seen a very strong pullback rally towards the previous day's high, but somehow Nifty unable to sustain that gain. And in the last 1.5 hour, we have lost all the intraday gains and Nifty closed at nearby the day's close nearby 24,760 levels, which gives some sort of a cautious sign on the technical front. Now, from the last few trading session, it's continuously trading in the formations of the low top, slow bottom formations, which gives the indication that on every resistance level we are witnessing a selling pressures, whereas the support levels little bit bounce back rallies are witnessed. But looking towards the technical setups, I believe that this kind of selling pressure is likely to be continued in the near term futures as long as Nifty doesn't give this strong breakout of 25,200 levels, which are the strong resistance zone for the Nifty. For today intraday purpose, the support is first placed at around 24,640. Any move below that level will see the extension of this fall towards 24,570 to 24,500 levels. I believe that up to 24,500 we are likely to witness the correction, and then from there onwards, some consolidation phase will be witnessed on the Nifty front, and then we can see bounce back rally. But 24,500, 24,400 are the crucial support zone for the Nifty. Till the Nifty holds those support zone, the view will remain a positive for a longer term period of time. Coming towards the Bank Nifty, for today intraday purpose, the support is placed at around 55,940. Below that level, 55,740, 55,500 can be tested, whereas the resistance is placed at around 56,440, 56,670 levels. So those are the important supports and levels we need to keep eye on it. The view is a little bit cautious on both the indices. Try to avoid the major long positions unless and until Nifty or the Bank Nifty doesn't give the any reversal signs. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as we have seen that in yesterday's session, the first half, there was a good reversal from the Nifty front. But again, in the closing hours, we witnessed that there was a liquidation which took place from the upside level. So Nifty is continuously facing the resistance on the upside at 25,000 mark, but on the downside, Nifty has we are seeing that has again taken the support near 24,500 to 700 range, where we are seeing that the put at the positions is holding strongly for the August series. For the August series, we are seeing that the support for the put right where we are seeing that as per the writing at 24,500, the put rate is almost around 7 million positions, and an upside to 25,000 to 25,200 call rate positions. The position is almost around 18 million positions. So currently, once Nifty manages to get a clearance about 25,000 to 25,200 range, after that we will witness a fresh long opportunity in the market. Till that point of time, we will see some range bound momentum in the market towards the 24,500 to 25,000 mark. As per in today's session, also we are seeing that Gift Nifty is likely to open about 100 points on the negative front. So again, we will witness some range bound momentum in the market in the first half of a trading session. But for the intraday breakout for the upside level will be at 24,900 level. Once if Nifty manages to get breakout about 24,900 level, then again we will witness 80 100 points of momentum on the upside levels, and the support for the Nifty on the intraday front will be 24,700 mark. So initial support will be at 24,700 level for today's X closing. Once if that level gets broken out, then again we will see 100 to 150 points stretch on the downsides. But till the time 24,500 level is holding strong, till that point of time, long term view will be on the positive front. While on the stock specific and sector specific front counter that looks positive today's session will be RBL Bank, Keynes, and Maruti looks positive. On the negative front, Chola Finance, Can Bank, and Muthoot Finance look negative. That's it from the front. Thank you.
Good morning, everyone. On the result front, FMCG has performed well, as Sunil sir said. Hindustan Unilever result was ahead of expectations in terms of both volume and revenue. Margins were broadly in line with estimates at 22.5%, but down 130 basis points on a YOY basis. The management highlighted that gross margins have bottomed out and expect sequential improvement from here. However, future earnings are expected to grow at modest level, Thus, we remain neutral on the stock, where it is currently trading at a PE of 53 times to FY27 earnings. Gillette India Limited posted the result, and the result has improved for the quarter with revenue growth of 10% on a YY basis and EBITDA margin at around 29.8% versus 27 in the same quarter last year. The company has delivered consistent growth in the last 2 to 3 quarters with healthy margins. We remain positive on the stock at a valuation of 47 times to FY27 earnings. Dabur India Limited posted the result marginally above expectations, mainly in terms of margins. Revenue was flat during the quarter, while margins improved on a QOQ basis and flat on a YY basis. We remain neutral on the stock at a valuation of 48.3 times to FY27 earnings. Make Money Organics had a con call yesterday. In the con call, the management highlighted that crop protection to grow at a double digits over the next 3 years. This is mainly on account of its focus on increasing high value new product contribution to overall growth. In terms of pigments, for the green and blue pigment, it expects the muted growth, while for titanium dioxide, it expects to improve the performance from Q3 onwards. It has started witnessing interest from the major players in India due to anti-dumping duty on the Chinese TiO2. Also, in the nutrition segment, it is expected to see the robust growth. We remain positive on the stock, where it is currently trading at 18 times to FY27 earnings. Arkin Chemical also hosted the con call yesterday. In terms of the result was declining, mainly on account of margins this quarter. Revenue has seen a growth of 38%, while the operating margins were at 26.7%. This was down by 680 basis points on a YY basis, however, improved 120 basis points on a sequential basis. It has seen increase in the expenses due to higher salt dispatch costs and the ECL provision. The company has observed delayed decision making by the global MNCs due to tariffs uncertainties. It highlighted that it has no exposure to the US market currently. Major customers are in Asia and Middle East. Bromine and industrial salt will continue to support its growth, while sulfate of potash, flame retardant, semiconductor project will drive the growth in the future. The guidance remained intact for FY26 with bromine volume in the range of 22,000 to 25,000 tons and salt volume at 4.5 million tons. Bromine prices to improve gradually, and lastly, it expects its subsidiaries to turn profitable as ramp up stabilizes. Overall outlook is positive. Stock is currently trading at 22 times P to FY27 earnings. That's it from my side. Thank you.
Good morning. News update from PNB Housing. Mr. Girish Koski, Managing Director and CEO, has tendered his resignation and to pursue opportunities outside, and same has been accepted by the Board of Directors. And its effective date is from October 28 this year, and this is negative for the stock. Secondly, Cholamandalam Investment and Finance posted its results. Results were okay. NII grew by 23.4% year on year. Profits were in line with expectations, grew by 20.6% year on year. AUM grew by 24% year on year and 4% sequentially. Its asset quality increased. Gross NPA came at 3.16% and net NPA came at 2.86%. The stock is trading at 4.9 times trailing price to book value, and outlook is neutral for the stock. That's it from me. Thank you.
Good morning. Eicher Motors posted the result broadly in line with expectations. Revenue grew by 15% year on year. EBITDA grew by 3% year on year, and EBITDA margin came at 23.9% versus expectations of 24.2%. PAT is above the expectation, and stock is currently trading at PE of 29.9 times FY27 EPS. TVS Motor result is in line with expectations. Revenue grew by 20% year on year, EBITDA grew by 32% year on year, and EBITDA margin came at 12.5% versus expectations of 12.4%. PAT is in line with expectations, and stock is currently trading at P of 40.7 times FY27 EPS. We attended a con call. So the management expects a stronger demand in Q2 FY26, supported by the upcoming festive season. Company has guided for continued improvement in EBITDA margin, driven by operating leverage, better product mix, and cost efficiency. The company aims to maintain its leadership in the EV scooter segment through expanded iQ variants. Management confirmed that PLI benefits for E3-wheelers will begin in Q2 FY26, supporting margin and competitiveness. So the overall outlook for TVS Motor is positive. Maruti Suzuki posted a result marginally above expectations. Its revenue grew by 8% year-on-year, but EBITDA declined by 11% year-on-year. EBITDA margin is in line with expectations. PAT is above the expectation, and stock is currently trading at PE of 24.7 times FY27 EPS. We attended its con call. So the management stated that the industry body had initially projected 1 to 2% growth. However, Q1 performance was below expectations. They remain hopeful about the improvement in Q2, supported by positive rural sentiments and upcoming festive season. Maruti's first EV is on track for launch in FY26, and the company is developing this platform with a global export focus, including Europe and Japan. The entry level and small car segment remain under pressure due to affordability issue and high financing cost. So the overall outlook for Maruti Suzuki is neutral. Lastly, auto sales volume expectations for uh, for July month are out. Two-wheeler sales are expected to grow well, helped by rural demand. Commercial vehicle may see slight growth, and passenger vehicle sales look mixed across the companies. Tractor sales are likely to fall due to seasonal factors. Uh, uh, so, so overall, auto sector estimates reflect a positive trend in two-wheeler and moderate growth in CV, while PV and tractor remain mixed. Thank you.
Good morning. Vedanta posted their results broadly in line with expectations. Revenue from operations declined 6.5% quarter on quarter and grew 5.8% year on year. The EBITDA has declined 13.5% quarter on quarter and is flat year on year. The EBITDA margin came at 26.2%. A few key highlights from their con call. The alumina production was 9% up YOY. The metal production was of 605,000 tons. These improvements were driven by low power cost and efficiency at captive facilities. The Zinc India recorded mine metal output of 265,000 tons. They had the lowest cost of $1,010 per ton. The deleveraging is continued at both Vedanta Resources and Vedanta Limited. The borrowing costs were down by 130 bips YOY to 9.2% due to improved refinancing terms. The target for aluminium for FY26 is more than 3 metric tons. And sorry, that was for alumina. And for aluminum, it is 2.5 to 2.6 metric tons with a cost of $1,700 to $1,750 per ton. For zinc, the target is 1.15 metric tons mine metals, and the cost guidance is 1,025 to 1,050 per ton. Update on the demerger. The second motion petition at NCLT is going on, and the next hearing is on 20 August. The management is confident of completing it by September to October 25. We are long-term positive on the stock. Ambuja Cements posted their results in line with expectations. Volume came at 18.4 million tons versus the expectations of 18.1 million tons. EBITDA per ton came at 1,066 versus the expectations of 1,048. Revenue from operations grew 4% quarter on quarter and 24% year on year. A few key highlights from their con call. Market share has increased by 2% to 15.5%. Premium product sales make up to 33% of the trade sales. Seamless integration of Orient Cement started in April 25, contributing to consolidated results. Green power share increased to 28.1%, aiming for 60% by FY28. Cement demand in India is expected to grow 7 to 8% in FY26. Ambuja targets to sustainably outperform the industry as reflected by 13% like-to-like volume growth, excluding new acquisitions compared to industry growth of 4%. The company will achieve 1,500 per ton EBITDA by FY28, supported by cost reduction and operational initiatives. The cost saving journey targeting 530 rupees per ton versus the baseline FY24, with 35 to 40% of this target is already achieved. FY26 capex is projected at approximately 9,000 to 10,000 crores, including payments for Penna acquisition and ongoing brownfield and greenfield expansions. We are long-term positive on the stock. Key highlights from the Tata Steel's con call, which we attended yesterday. The net realizations are expected to decline by 2,000 per ton for India. For UK and Netherlands, the realizations will remain flat or slightly higher. About the raw material cost, coking coal cost is expected to decline by $10 per ton, and iron ore in Netherlands is expected to decline by $7 to $8 per ton. The volume guidance given by them is additional 1.5 to 1.6 million tons YOY. They have targeted to reduce their debt by 6,000 to 8,000 crores in FY26. About their expansion plans, the Ludhiana mini mill of 0.75 million tons per annum electric arc furnace based rebar plant is nearing commission. It is designed for cost efficiency using local scrap and market proximity. The NINL is 100% acquired, currently producing billets. The final investment decision for expansion is likely by October to November 25. We are long-term positive on the stock. Lastly, Coal India posted the results above expectations. The offtake came at 191 million tons versus the expectations of 190 million tons. It has declined 5.1% quarter on quarter and 4% year on year. The EBITDA per ton came at 655. It has grown 12% quarter on quarter and has declined 9% year on year. Revenue from operations have declined 5% quarter on quarter and 2% year on year. EBITDA margin came at 35% versus the expectations of 32.4%. Thank you.
Yeah, that's all from us. Please, commodity team, please take up.
Yeah, thank you very much, sir. Good morning, everyone. So yesterday we witnessed sell-off in gold and silver. It might continue. Gold may test 89, 300, 350 on downside, from where one can initiate a buy for a pullback with a stop loss of 98,000. All in all, one can also sell around 99,000 with a stop loss of 99,300. And in silver, uh, prices might test 1 lakh 9,000, 1 lakh 8,000 on lower end, which seems to be good support area. So buying can be initiated from these levels. And on upside again, 1 lakh 11,000 is the area where one should take profits. And crude oil, we are expecting prices to test 6,000 59.70 on lower end. So selling around 6080 with a stop loss of 6150 is recommended. Also from 59.71 can initiate a buy with a stop loss of 5900. Natural gas, one can buy for a pullback around 170, 270, 268 levels with a stop loss of 260. On upside again, 280, 285 are the levels where one should take profits. In base metal, copper looks a pullback is expected, and one can initiate a buy around 875 with a stop loss of 870. And upside again, 885, 887 are the levels where one can book profits. And zinc too, a pullback is expected. So buying around 264.50 with a stop loss of 263. And again on pullback 267, 268, one should take profits. That's it from us. Thank you very much.